or Madame. And over here at the 200, this is the big level. And you can see the huge amounts of calls. Puts, unlikely to get paid this week. This call, I doubt wants to be called. But last week, the 150s, 155s, they were actually blown through. So you've got to be careful here. But this sits right on that extreme area. I doubt the market would wish to close above that by the end of the week. So just before we keep going through the charts, and we've got some great ones coming up, we'd like to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now remember, members of the FX Evolution community, there's a whole bunch of special offers down below. You can check out from any pretty much country whether you're eligible to go through. Just contact the Singapore office if your country is not mentioned down below, and they can see whether they can hook you up with an account. And there's also a bunch of special offers that we have specifically got here for the channel. Now, why would you potentially want to pick Tiger Brokers as your broker? Well, the reason is simple. There's plenty of great tools. During earnings season, you need news, you need earnings calendars, and you need live streams potentially for the calls. Well, a lot of those are inside the platform itself. I also like to look at opportunities of flow. Now, recently, of course, it's been great to be in semiconductors and automobile manufacturers and all sorts of things like that. But what is little known is some of the opportunities in the short side. Yes, metals, materials, those types of things, and obviously gas have been kind of weak in the recent 10 days. And that trend has continued through to the last 24 hours. You'll notice some of the weaknesses here in pharmacy, integrated oil and gas, and even managed healthcare. So there's different opportunities for different people depending on what you're looking at. That's why we've been talking about copper so much on the channel. So check them out, look at the special offers, and hopefully you can find one that's right for you. Let's move over to Apple, and another one that's opened up here. Huge rally, big level. As you can see, it's a monster zone, and then we've now seen stock after hours after earnings close down. So let's have a look at the 2 hour just to see what this would look like. Is this an island? Well, technically, yes. I mean, that's an island. It's the first island reversal that we've had during this entire rally. There's actually been no turn at all. Like, it's just been higher peak, higher, trough, higher peak, higher, trough, higher peak, higher, trough, higher peak, higher, trough, the whole way through. This would be the first initial sign of weakness. Obviously, once you get through these demands, then you can start to talk about actual weakness coming in. But look, interesting where it got to. Expected weekly options high, almost to the tap of where it is right now, and it's going to open underneath. So if we get like an initial rally and then it ends up selling as a bear, this was the day that, bears may get involved in it, depends on non-farms a lot, then yeah, feasibly we could have an island here. And it's not just Apple. Let's move over to Amazon. It's the same thing. We're not at a critical stage for Amazon, but we are at the expected weekly options high that we put in. We also know that stock after hours has almost taken off most of what was put on the previous session. And we know that this would look like an island. If we go down to a 2 hour, it's going to be the same thing. Here it is. Bang. The 2 hour, the gap down, that's a big one. If we then move over to Google, and we can see here this huge level over on the island, again, stock after hours, 102.78, coming back to that roll reversal area. Is that an island? Well, yeah, technically it is. It's gapped up, massive, possible FOMO. It's gapped down, massive after earnings. Certainly something to be concerned about and watching. This is the first time we've seen really any significant weakness. Every other time we've had gaps down, we've never had the kind of gaps up, or we've never been really in that kind of massive turn. We've obviously seen a breakthrough trend lines. It's broken through key resistances. Is this the mother of all traps? Well, we'll look at both scenarios very, very soon. There's probably going to be some buyers, though, you would think, that would try to commit in the early session. Now, the last 24 hours was certainly not the Dow. The Dow did nothing. It was down, actually, most of the session. So this was run by FOMO into the Russell and into, of course, the NASDAQ. Here's the Russell approaching a key zone. You can see the volume was spiking up as well. So it was a pretty heavy session and a lot of buyers coming in. QQQ ended up taking this little high over here and rejecting it. Obviously, after hours, it's down. This will also be opening potentially as an island reversal. So these traps, have we seen this before? Well, we did see it over here. That's what actually happened. Gapped up, gapped down. That was the end. Then over here, we have a beautiful island reversal. I like that one very much. That was a great day, believe me. That was a great one. Then we've had island reversals over here as well. and we've had them in the upside. This is something you do need to be concerned about. I tend to like islands where you see rotation in them. So that is usually consumer discretionary, or maybe like the hot sectors start getting rotated out of and the market turns defensive. But it's a critical zone. And for buyers, they might want to recommence. But where do they recommence? Is it down a little bit lower? Do we allow a sell-off to occur? Let's have a look at the futures action. Here is the futures take for the NASDAQ, and it was sneaky. The US 100 took the high previously over here, you can see that purple line I've got, then it rejected it. Now, let's have a look here at the 2 hour, just so we can further understand how it broke out. So you see that 8 hour came back into this channel that we had in the previous session. Let's go to a 15-minute now and just have a look at the reaction that we had. So this is the after hours reaction. The market was rallying. It's all great. It sold off heavy, then it rallied, then took the high, forcing a higher high through. We now have those kind of lows here, and we've moved down. I do kind of expect a rally to come through, but there could be some levels in here where markets find further sell-off. Remember, it's most likely going to gap down. It does depend on non-farm payrolls, but if bears are going to have a shot at it, that's the type of thing you want to see. Little takes of highs to take out the stop losses that were put in during the sell. Then it whips them out, pushes down. We get the earnings that are not so good, and then we potentially suck in that liquidity. Certainly a key level. For bulls, I mean, all you want, guys, is just bang, slap that out, take a new high, and it's on to one of the key levels that we'll discuss in just a moment with the SPX. Here's the S&P 500. You can see the unfilled gap still above. We're approaching those levels. I want to focus on that level, though, right above here. The zone is going to be so critical, 43.25. Let me just quickly show you how much percent from bottom we would do. So we technically have now entered the 20%. That is a new bull market, theoretically, just got hit. Now, during 2008 and 2001, 2002, we've done this several times. So it doesn't, yes, it's a technical new bull market, but that doesn't mean anything in particular. We've seen it false upwards of 25%, but never more. So if we took the bottom off, I don't think never more by more than 1% after that. So if we actually think about this 43.50 level, this is so critical. Now watch the stack that I'm about to do on futures. We'll just quickly look at the SPY. Obviously, we're above the expected weekly options high, which sits around here. So, that would be a cause for maybe the markets wanting to pull back down. Here's the 8 hour chart of the ascending, so you can see where it is. Look where it closes at 41.55, right on that high, taps into the liquidity here at 41.97.42. Interesting zone, certainly a critical level for it. And if we scroll down to the 15-minute chart, it doesn't quite have the same high take. Look where it came back to. It didn't quite get the new higher high, and it's come back. So I think that it's a very tough point here for the US 500, but obviously the islands on the tech stocks are the big one. So I wanted to stack the level and show my uppercase boundary level. And I said I'd bring this into the chart, and it's stacked in here. It's basically around that 43.50 zone. And what that would do is it would take all of the previous highs, it would stack with some of the most traded zones throughout the pandemic, high getting taken out all the way to the run, and all of the drop off right now. So it's an incredibly stacked zone. And I do like confluence stacking. So if this market's going to continue to go bullish and it's going to breach this 4,200, I don't see why they wouldn't try to push it up here. I'm not sure that's going to happen. Of course, at this stage, there's some serious bearish catalysts here. But if they need to get more calls in the system and expire more puts, and that's the way that the composite man or the big players want to do it, this is a cause for concern. And of course, this is here, I believe, the most critical level of the markets. And look, that's just my opinion, but hey, I'm just trying to show you what I'm thinking about here on the channel. And of course, if you're interested in those types of things, always remember to subscribe. Let's have a look at the options. We'll refresh this here just so you can see what's going on with Options World. And Options World is pretty interesting. Obviously, the Thursday there, you can see the 420s. They're not going to get, well, they didn't get paid. They lost out. Let's have a move over to current price, though. So we've got 410s, and then we've got super amounts of puts still, 400 puts and 395 puts still stacked. Everybody's still trying to go bearish. That's a problem. That's why the market's rallying in the SPY. And you can see here the 410. So theoretically, the market might wish to come down a little bit. Max Pain sitting at 400. That'd be a great level for them to close at if they wish to. And it looks like that last 24 hours may need to be kind of faded if they're willing to, make the most amount of money in the options market. This is nowhere near a huge options week. To put it in comparison, we go to the 17th, you can see there's already 4 million units there, and the options are starting to get kind of fierce, unfortunately, with the puts as well. They keep stacking these levels. It's very frustrating if you want the market to go down, because it's lame to see them stacking so hard here. Don't know who this person is, but yeah, there's a bunch of 460s in the system as well. But at least there are calls coming back in. So if you are feeling bearish, it's very tough to short into such options plays. And in the last week or two, these February's continue to get stacked on, which is a problem. So this week, we're thinking 410 under would be the best for the markets to try to get to that 405, 400. Maybe a bad Friday's coming in. But overall, unless we see a change to this chart, we need to see more calls entered into the system. It's a big deal. And it's traditionally what allows markets to turn around. What about crypto? Well, it keeps just kind of chugging along. Bitcoin just going up on this ascending. Is this all part of a big fall that happens? You know our thoughts. We get underneath here, then we move to the next level. At this stage, we've got a set alert well above the highs. That's going to be that critical point. And if FOMO gets out of control, probably something like this happens with Bitcoin at the same time as we see the stock markets hitting those critical zones. Yeah, it's a big one coming up. Remember, non-farm payrolls comes out 1 hour before the market, so that's going to send some shock waves through it. And this is the unemployment numbers. Then we have ISM Services PMI. So that really brings us to the end of today's show. A special thank you to Tiger Brokers, who of course sponsored today's video. Links in the description down below if you're interested in joining them and getting any of the special offers that they do offer the community here at FX Evolution. If you're interested in following along with our daily small snippet show, definitely follow us over on TikTok. And of course, we're really focusing on a lot of our socials here to offer you guys the most amount of edge as possible in 2023. Another thing I would like to mention as well is the competition. So thank you so much for everyone that went into the Chinese New Year competition. We'll do the prize draw right now. Let's take a look at it. Okay, so here comes the prize draw. We've got 5 prizes to be given away, and it's going to be in order. So basically, the person at the top of the names is going to get the biggest prize, and then we'll drop it down. We will email all the winners, and congratulations to anybody that joined in. I'm telling you what, you gave yourself incredible odds over this period. So let's press the start button. It's going to load it out. So remember, the first person's going to win the biggest prize, which is the private group mentoring, and then we'll go through, I think it goes options, advanced scalping masterclass, and so on and so forth. Here we go. We're about to get the names, and there we go. So Andreas Jones, you're the winner. Then we got Dane, Paul, Bart, and Michael. Congratulations, guys. I'm glad that you took advantage of the offer, and what a great competition it was to be in.